from here all the way to that terminus, I will be looking for trades in a buyer's direction. Now, I'm just going to ignore this weekly fair value gap because I'm trading intraday. The larger time frame stuff is only more impactful by the time where the weekly candle is closing. But for now, I do want to see some kind of reaction when it comes to the larger time frame premium discount array. And you can see the reaction from the daily point of interest. Mic test. All right. Hi everyone and welcome back to the channel. So today we will be implementing whatever I've been teaching in the previous few episodes. So let's see. So for the last few episodes, I have been going through the basics called my beginner trading guide from episode 1, 2, and 3. So if you guys already understand this and you want a bit more homework, feel free to go into Trading Psychology 2025 as well as Full Strategy Explained. So what I talked about in those two are shown on this chart. So this was what I drawn out on 26th December, and my expectation was for price to drop lower until possibly October high. So I want to show you guys what happened. So for ES, we can see that price from here drop down, and then from here it dropped into weekly fair value gap, and then on the last one, DJ, it just took out the previous week's low. So if you want to find out how I even find this move lower, please feel free to check out that video. And for now, we will be implementing whatever I've taught into the current markets, which is 6th January. So I always start off with the news. So for the news of the upcoming week, we have Tuesday, Wednesday, and Friday. So over here, you can already see that Monday and Thursday, you can just take it chill. You don't even have to show up to the markets if you don't want to. This is where you can fit in, your dinners and gathering. And since we're on the beginning of the year, we have to start off the monthly time frame. So from here, I'm comparing once again ES, NQ, and Dow Jones. So ES is the top 500 companies, and then NQ is the top 100 tech companies, and Dow Jones is the top 30 companies. So from here, we can see divergence, where December candle for ES is red. For NQ, it's green with a long wick above, and then YM, which is a big down candle, red candle. So on the monthly time frame, I would look for two premium PD array above and below price. For ES, we have the monthly open for December and the previous month's high, the previous month's low, and the order block over here. And then for NQ, we have the 50% of this entire week, which is also an imbalance, which is also a fair value gap, and the previous month's high. And underneath it, we have December open, as well as previous month's low that is mixed in with the monthly fair value gap. And lastly, for YM, above price, we have 50% of this entire December range. We have previous month's high, and underneath it, we have previous month's low and monthly order block. Just the first week of January, you could see that DJ has already taken out the previous month's low, while NQ and ES are not there yet. So now moving down into the weekly, we see money sitting underneath the 3 months low where divergence last occurred. So why I'm looking at the last 3 months is because that's the last quarter of the year. So this would be a significant low point where we have liquidity sitting under with equal lows. And for NQ, we have higher low over here, going from the beginning of Q4 into the mid of Q4. And lastly, on YM, we have the beginning of Q4 giving us a low and then a lower low in the midpoint. So this itself is divergence that sparked the move higher into new all-time highs. So now we can see that this is our entire last quarter range, dealing range that we mentioned before, and this is what we want to look at when we go down into the smaller time frame. So another thing that I spotted for the weekly time frame is that there's another divergence between candles So this might be a bit high level, but just bear with me, okay? Look at this candle right here. It is taken on 9th December for all three of them. We have a red candle on ES, we have a green candle on NQ, and lastly, we have a red candle on YM. So this was the divergence that started the drop lower, right? And another divergence we can see is 2 candles down. We have a green on ES, green on NQ, while it's a red on YM. So just between these two divergent candles, we can see that ES gave us the same equal high, and then NQ is a higher high, while YM is a lower high. So if we just go back up and check out the previous divergence, ES is also the one which is giving equal, and then while NQ and YM are like divergent. So this is just something I spotted. So it would be nice to just think of this before the next turning point. So I'm just sharpening up my X by putting it out on the chart to tell myself that, okay, this is what I noted as well. Okay, so from this point on, I'm actually anticipating for price to come down and take out the 3 months low liquidity as the final terminus. So from here all the way to that terminus, I will be looking for trades in a buyer's direction, unless it shows me on the weekly time frame or the monthly time frame that there's a significant divergence that is happening. Then I would anticipate for price to go higher. So from now until then, it's just from price current all the way to the 3 months low for each of these assets. Right. So for daily, we have the dealing range now of the last 60 days. This is why sometimes ICT concepts are overlapping. You could call this the 60-day look back, or you could call this the 3 months low, or you could call this the Q4 range from 2024. On 60-day look back, ES and NQ are currently in the premium zone. So from 0 to 100, right? 50% is somewhere in the middle. So anything above 50% is premium. And then for NQ, you can also see that it's above 50% just by eyeballing it. It's in premium, while Dow Jones is in discount already. So in my opinion, I feel that Dow Jones is just waiting for the rest to catch up. On daily, I'm anticipating lower prices. So if I'm looking for premium area for more drop, which means premium area for better entry to short, Monday to Wednesday, I will be looking for price to reach into this daily bearish fair value gap on ES and NQ, while daily inverted fair value gap for Dow Jones. Now, I'm just going to ignore this weekly fair value gap because I'm trading intraday. The larger time frame stuff is only more impactful by the time where the weekly candle is closing. So for now, I would just look at the daily time frame with this fair value gap above of it, in line with the previous month's open, in line with the new week opening gap that's sitting right inside. Okay, and then for YM, it will be daily fair value gap, new week opening gap, and the 50% week of December. And for YM, which is Dow Jones, it is the daily bearish volume imbalance. There are indicators on TradingView that you can add in, and in this case, I put in the ICT Lookback. You can see how all the levels I've marked out is the same area where the last 20, 40, and 60 days low and high would be. So another form of example on how multiple ICT strategy are in confluence, and you don't have to learn everything. Just a few good one that you trust is good enough. This is the 60-day look back indicator. This is where price is currently. So if you look to your left, this is the last 20 days, this is the last 40 days, and the last 60 days. And if we match the low from the last 20 days, it's considered the previous month's low. And then on the last 40 days, it's sitting right where the monthly order block is. And for the last 60 days, it's where the equal lows are. For NQ, the last 20 days is previous month's low. The last 40 days is where the higher divergence is. And the last 60 days is the lower divergence. And lastly, we have last 20 days, previous month's low, the 3 months low over here, and the low that has been taken out, 40 days, right? So for 40 and 60 days, they are both this 3 months low. You can already not use the ICT look back, which is why I mentioned that over time you will just use lesser and lesser indicator when you start trusting your own price analysis. So going down into the H4, I have moved the weekly fair value gap back so it will not interrupt the way I see price from now until the daily bearish fair value gap, as I believe that price would just pass it a bit higher and then drop later on the weekly time frame. It will still be respecting the weekly bearish fair value gap, but on the smaller time frame we would be able to find entries over here. So this price point is only more important when we go into Wednesday, Thursday and Friday, or after price have already tapped on this zone that I'm looking or waiting at. Over here we can see a smaller time frame divergence underneath. We have low, higher low, we have low, lower low, and low, lower low. And this divergence is the one that pushed price higher, potentially going into my point of interest. So I'm just making sense of the market right now. And here's another view of the H4 in a close-up view. So I always know what I'm looking at. This image didn't load, but let's just read what I said. On H1 intraday, there is a prominent new week opening gap on 29 December. Highlighted it for ES and NQ to show strength. Each new week opening gap can be used as a bus stop to get on or to take partials before hitting my terminus. So waiting for the day to arrive, because I actually drew this out on Sunday. So I was waiting for Monday to arrive and watch how Asian, London play out before I match it with the news. So now that we're on Monday already, this is the news that's happening, which is nothing. So right now we're on Monday already and there are no news that is happening. So let's just go into the charts and take a look. All right, so this is the H1 time frame, and this was the new week opening gap that I highlighted on 29th December. So the reason why I picked this 29 December was because of Dow Jones. You can see that in between there weren't any new week opening gaps, while for NQ it had one over here and one more over here. So I just decided that this one is more significant. But as we can see right now, price have already burst through it for both ES and NQ, while Dow Jones is just tapping on it. So what we're gonna do is just record this, copy image, and then update Monday. Right now it's 10:44 a.m. New York. Price has reached into my point of interest. Alright, so from the monthly time frame all the way down into this last chart that you're looking at is majority of my larger time frame stuff, which I taught in that 3 episodes that just got uploaded. And everything else now is smaller time frame, which I will be going through in a more theoretical form in my upcoming episode. So make sure to subscribe and stay tuned. So basically, what I'm anticipating right now is for price to show me some sort of reaction from here, some sort of divergence. And what I want to do is just match them with all this timing that are coming out, which is the news timing. So right now I can see that price have already reached my point of interest without any news. If it starts to break above the daily fair value gap for both ES and NQ and the volume imbalance for YM, then I can anticipate for price to possibly go even higher. So this is where I will look out for more premium PD array from the previous month's open all the way to the previous month's high. As we're still on Monday and there is no particular news going on so far, I would continue to wait until Tuesday news before I take any more action. So basically, I already know what I'm looking out in the weekly time frame. And if price decides to show me some other move, this is when I will adapt to it by adding in more like smaller time frame premium discount PD array into my expectation. But for now, I do want to see some kind of reaction when it comes to the larger time frame premium discount array. This is 12 hours from the last chart you saw, and you can see the reaction from the daily point of interest. Alright, so this is the end of implementing the larger time frame stuff into the charts at current market time. I will be doing an update at the end of this week along with the smaller time frame stuff, the intraday trades, what I see within 1 week time frame, and then the theoretical part of the beginner trading guide part 2 will be out at the weekends. So make sure to subscribe because 50% of you guys subscribe only, and turn on the bell notification if you want to learn the latest scoop, which you can implement immediately in 2025. So thanks again for watching. I'll see you guys in the next episode. Bye.